Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. This show gets you actionable insight on everything personal finance related, whether that is with regard to your investments or your expenses or tax. And today, I'd like to talk about two things. One, the prices of gold and silver. They've actually fallen off a cliff. We'll talk about why that is and what you should bear in mind if you were actually in the market for gold and silver, and if you maybe pushed that purchase down the road. Should you go out and buy now with the expectation that the prices will eventually go up? And what is driving the prices down? And the second conversation has to do with buying a car. How should you plan to do it? Is it better to buy it on EMI or should you buy it outright? And also, is it a good idea to utilize the tax aspect of it if you are a professional or if you own a business to set off the expense of buying a car? How do you use the tax laws in your favor? That's the second part of today's conversation. Let's start with the first. Navneet Damani, Group Senior Vice President and Head of Commodities Research at Motilal Oswal, joining in. Navneet, thanks so much for taking the time. Just before Diwali, I had actually asked you a question, and I know for a fact that I did. What I said is, normally we speak about buying gold during Diwali, but I said, should you defer your purchase or should you even sell? And you said, don't do anything, if I remember correctly. And you said that the prices are likely to remain range-bound. Maybe we've seen a cap. Why did we see such a sharp fall over the weekend, though? Or not over the weekend, or the last couple of days?
Gold prices, gold, silver, I would combine them together, went up the elevator and came down with a parachute. I would like to put it that way, because the kind of exuberance, the kind of momentum we were into is something we've not seen in the last many years or probably decades as well. Something like silver behaving like a small cap stock, up about 85% year to date, something like gold which were up 55% year to date. So these were some calling signals where you could see some signs of exuberance, and that's exactly what we discussed in the last interaction with your team as well. And we also mentioned that if somebody wants to buy at this juncture, it's better to postpone your purchase than to buy here. You want to buy something, tokenize it, buy at a very limited quantity, you will get better bargain levels. And today we stand at better bargain levels. We are down about 10% for gold from highs. We are down about 18-19% for silver from highs. And the kind of exuberance we were seeing in the physical markets where silver was trading at a significant premium, that is also kind of eroded. So is the question now is, are we at the best buying levels, or maybe we'll have to wait for another round of dip, another round of correction where we should re-enter?
In fact, that is my next question, which is that now that you've seen some money getting taken off the table, usually you see that extending a little bit. So is there potential for further downside in your opinion, Navneet?
Well, fundamentals have not changed much. To a very large extent, the story for silver remains very strong. The demand side scenario is very stable, very strong. China has been buying it left, right, and center. So are central banks adding gold time and again, in their kitty. But over the last 1-2 months, or maybe last 15 days, what we've seen is there has been some bit of geopolitical news that has now started to get the premium started to erode. And eventually there will be some truce between maybe US, China, US, India, and rest of the world, which will eventually help the dollar index to stabilize and maybe even fall. And the kind of momentum we are seeing in the US economy, where about 20 to 23 days of straight shutdown and no resolution as yet, is calling signal where the dependency on dollar is going to reduce. These are signs which are giving a long-term indication that gold and silver are likely to be bullish. But these corrections are healthy. These corrections were warranted, and the weak hands might get off the table for now, for the time being, and maybe a better bargain entry level could be in place over the next couple of weeks or so.
Okay, let's talk levels then, right? And give us levels in your opinion for both silver as well as gold. Where do you see the near-term bottom, and therefore where do you think is a good level to start accumulating? Of course, if somebody's got the intention of keeping on buying them, gold and silver in the long-term portfolios, and you can continue doing that. A lot of people say that buying a little bit every month might also make sense, considering everything that you've said, right? The long-term fundamentals remain intact. But what is the bottom? And by the end of the year, perhaps, or the start of the next year, what are the levels that you would see gold and silver at?
Well, firstly, I'd like to reiterate my stance that we are more positive on silver than on
Okay.
gold, and expect that silver could give you about 30-40% returns from the current levels also. So as we speak, we are trading at around $48, and better bargain levels are in the range of 45-46. That's about 5-6% shy of where we are today. So I expect another round of correction about 5-6 thousand points or even higher in gold, in silver particularly. And on the domestic front, it will equate to around 1,30,000, 1,35,000 levels, where one can look to deploy a sizable amount of capital in silver from a medium term perspective. As far as gold goes, gold is trading at around $4,100, and I think once we could be in a position to test about 3,850, levels in worst case, that should be a level where one should be looking to accumulate gold. However, the targets are not really very significant like we have for silver, where about $70-$75 is where we anticipate silver to be. For gold, maybe it would rebound to about 4,250, and in best case $4,500. On the domestic front, bargain levels buy at 1,10,000. Upside potential could be around in the range of 1,30,000, 1,35,000.
Okay, so those are the levels to watch. The last point, you've mentioned the positives on the fundamental side. I'm just wondering whether you have listed out any of the major negatives that could come through. One, of course, is geopolitical tension and a resolution in the conflict in Ukraine. If that were to come to pass, would that result in a near-term negative for gold prices? And is there anything else, in your opinion, that could cause people to go out and sell these two precious metals?
Is Russia-Ukraine war is about 3 years old now. We've celebrated 3 anniversaries of this war, and I don't see it concluding anytime soon. There has been enormous pressure from across the globe, but it's not concluded really very well. Secondly, Israel-Hamas is where the action is, and even after truce, even after intervention from the US, you see time and again that truce being broken, and there are some of the attacks which continue to be in place. So this kind of momentum will continue. Of course, this if they settle down, there could be one knee-jerk reaction. So that is where prices are expected to correct by about 5-7%, and 3,800 could be on cards. Other than that, the demand side story doesn't warrant that kind of movement to come in. And we also expect that if the dollar index starts to retrace again, it goes back to higher glory, then there might be a scenario that if the rate cut scenario goes for a toss, if inflation starts to rise, and maybe the October cut might come in, but the December rate cut possibility topples, then there could be a scenario where we should get worried that what kind of global economies, how they will fare up, and what will the stance from the US over the next few quarters. So these are some worrying factors which could lead to some knee-jerk reaction in prices, which could lead to a reasonable sell-off in prices. But these opportunities, these reasonable sell-offs will be bought into because the world order is changing. We have to understand that and dollar will no more over the next 2, 3, 4 years be the driver currency. Central banks are looking for alternative, and once these guys are looking for alternatives, you have to find a safe haven, which is nothing better than gold.
Yeah, you said it. Absolute pleasure as always speaking with you, Navneet. Thanks so much for taking the time.
Thank you.